Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 3rd of September. Starting off with a stock which is still box office, I suppose, in terms of the following. Vactor, nice rebound here off, actually we had the false move towards £2 last month, came back to test the broken resistance line from June as new support quite successfully over the early part of this week. And the view at this stage is, at least while we're above the 20-day moving average, the purple line there, we should retest last month's resistance at £2, and best case scenario here up to the top of the rising trend channel from April up to £2.40. So not a bad risk reward on the face of it at the moment if you use that 20-day moving average. Another stock in the same kind of space, Allergy Therapeutics. Here we can see that shares have already, I suppose they're about a week into a decent breakout there through 16 pence. And I suppose at the moment, while we're above 16 pence, looking for the top of the rising trend channel from back in August last year, currently pointing as high as 27 or 28 pence. That could be seen as soon as the end of this month if we're lucky, or perhaps going into the middle of October if things are rather more sedate for the shares. Another stock which is looking encouraging at the moment, a different area though, is Arkle Resources. Here we've had decent daily candle so far today, above the 200-day moving average at 1 penny. While we're above that on an end-of-day close basis, looking towards the top of the rising trend channel from February, currently pointing, or its resistance line pointing as high as 1.9 pence. If you're cautious on the shares, maybe wait for recent post-May resistance at 1.2 pence to break, but looks as though the shares are finally on their way. We had some bid speculation in BT the other week, which was obviously a damp squib, and one suspects it might be the same thing for Capita as well, but if the Daily Mail are onto the story, obviously it's got to be true. Here we've got a situation, at least from a charting perspective, we've had a near-term bear trap, which is what you tend to see ahead of takeovers, just to flush out any weak hands or people who are in the stock by accident. Here we've got the gap higher today, which completes the island gap, which is a positive charting signal. But we probably want to see at least an end-of-day close above the 20-day moving average at 33 pence. We're just shy of that at the moment to at least start talking or thinking about the stock delivering a rally. Otherwise, if we do, if we do get that, then the best case scenario target, if you're a fan of Capita, would be the top of that broadening triangle I've drawn from June, as high as 45 or even 50 pence. But at the moment, probably one would not be backing much further gains than whatever we've seen at the moment. Stock which I think I have covered recently, but can't really claim the credit for any big rally today, I suppose. It's just interesting to see where Orosur Mining is now. We had the gap higher just at the end of the last month, unfilled gap, and that's normally a decent sign of a breakout to come. We've all but hit the target that we had there at the top of that rising trend channel from November, which was hopefully going towards the 9 pence area. Might still get a little bit more out of it, but really we've got to hold the old September resistance at 7 pence. So upside really only on the cards here while we hold above 7 pence on an end-of-day close basis. If we can do that, we could see rather more from Orosur. I suppose the best case scenario target would be if the shares could head towards the resistance line that I've just drawn at 15 pence, which is a 1-year resistance line projection. But all of this hinges really on the shares holding around the 7 pence area, but probably seeing the best of it, at least for the near term. Stock which has been proving the doubters wrong, recent IPO and doing very well, Pensana Rare Earths. Here we've had gaps on the chart, several gaps actually, in the recent past, so end of July, a couple in August as well, and then a good one today. The view at this stage is that we're probably in a rising trend channel, which of the type that I've just drawn there. Top of the channel there heading towards 65 to 70 pence, and the upside valid while we hold above the floor of the channel and the 20-day moving average just below 40 pence. Ideally, there's no end of day close back below the floor of the gap at 41.7 pence. So holding above the low 40s, we could still see Pensana hit the 60s over the next month or so. Not quite as dramatic from President Energy, but we've had, I suppose, we had a little flurry this morning. The message here really is looking for an end of day close above 2 pence for this stock, and the upside value while there's no end of day close back below the 50-day moving average at 1.64. Best case scenario target if we break 2 pence would be that resistance line there from March, currently pointing at 3.5 pence, but that currently feels like it's quite a long way away. Next stock is one which is also trying to build. Got equatorial palm oil, nice gap higher today, but a bit like the previous stock, it's all about breaking near-term resistance, which in this case is around the 0.75 pence area. End of day close above that, and we could see equatorial heading towards the line of resistance, so the top of the broadening triangle there from January, currently pointing at 1.1 pence. The upside, I suppose, currently valid while we hold above the 200-day moving average at 0.51. Ideally, we don't break back below the 50-day line at 0.58. Just a couple of stocks to go now. Integamen, looking pretty smart at the moment. We did actually break that line of support. Obviously, there was a bit of M&A activity, but a previous resistance, initial August resistance of 3 pence has so far held. And while we hold above that, probably looking towards the 4 to 4.5 pence area once more, maybe back towards that broken resistance line, which is currently heading towards the 4 pence level. So above 3, possibly towards the 4 area for Integamen. Finishing up with another stock which had a nice burst today, tertiary minerals. Here you can see that we actually had the trend line break to put us in bull mode at the beginning of last month, but it was mostly sideways price action in the 20s. Today we've had a nice break of the troublesome 0.3 pence level. While we're above 0.3 pence, looking for a retest of 0.47, which was the old April resistance line, but really need to hold that 0.3 pence level, even though today's gap is looking, the gap higher is looking quite encouraging indeed. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.